Alright, y'all, this is going to be an instructional video where I show you a very powerful, simple trading strategy using Market Cipher. This will be a Market Cipher tutorial video. And this is something that I feel anybody can do, even if you're new to trading. I think this is something anybody can do, and if you do it properly, and you're patient, and you wait for the right confirmations, and you wait for the right setup, and you implement good risk management, I truly believe that you can be profitable over time only trading with this strategy. Now, is it the best strategy in the world? Absolutely not. Are you going to long the bottom and short the top? No. But are you going to make money doing this? Yes, you will. This strategy involves using the 1 hour time frame. It involves looking at the money flow and the momentum waves on Market Cipher B, and that's really about it. This is something that I recommend people start out with if they're new to trading, new to using the Market Cipher indicator, while they're learning technical analysis, while they're furthering their trading skills. This is something that even to this day I use as a huge part of my overall trading strategy, but it's a very simplified version of it. So if this is something you're interested in, technical analysis, trading strategies, make sure to like the video, make sure to share the video on Bookface and TikTok and Twitter, all those MySpace and Zanga and all the social media, all AOL and AOL Instant Message, all those things, guys. You know what I'm talking about. Share the video. Make sure to subscribe to the channel because we do provide quality technical analysis and trading content on this channel. So, what is this Market Cipher strategy? First of all, you are going to need the Market Cipher indicator. If you don't have it, you can, if you want to, click my affiliate link. Or if you don't want to support the channel, you can go to marketciphertrading.com and get the indicator. Either one is fine. Then what we're going to do is we're going to turn on the 1 hour time frame. Very simple. You don't even have to have a paid TradingView account to use this strategy. And we're going to be looking at divergences, money flow, and we're even going to touch on risk management. These are the three pillars, the three legs of the stool that are going to allow us to actually have success trading with this strategy. So let's talk about what a divergence is. This is the bread and butter of this trading strategy, guys. A divergence is where Market Cipher and the price are doing something different. So if price is in an uptrend and it's making higher highs and higher lows, okay, what we want to do is we want to look at Market Cipher B, which will be mirroring price, right? We will look at these momentum waves, and if you're new to Market Cipher B, these blue things are called momentum waves. Let me just quickly turn off everything. I'll turn off the VWAP, turn off the money flow. These are the momentum waves. Okay, these big blue humps, and you'll see that when they come to a top, the price starts to come down. When they come to a bottom, the price starts to come up, right? And they usually mirror each other. So we'll probably see that we had a wave underneath the zero line, and then it comes up here to the top, and then when the wave crosses over, price comes down a little bit, and we print a momentum wave down here, and then it crosses, and we print another momentum wave up here, and then price will come down a little bit, and we'll print another momentum wave, and then we come up to the top, and then price will come down a little bit. Now here's what we want to look for. We want to see the price and the Market Cipher B momentum waves diverging, meaning they're doing something different. An uptrend is identified by price making higher highs and higher lows. We have a high, we have a higher low. We have a higher high that's higher than our previous high over here, and then we have a higher low that's higher than our previous low over here, and then we have a higher high. Now, you should see the same thing on Market Cipher B, where as price is making higher highs, the momentum waves are also making higher highs. But if you see a divergence where the momentum is not following the price, and the momentum wave is printing a lower high while price is making a higher high, this is called a divergence. Okay, if it's happening at the tops and you're connecting the tops of the price with the tops of the momentum waves, this is called a bearish divergence. So a bearish divergence is connecting the tops. Okay, we're connecting the red dots on Market Cipher B with the highs of the price. Okay, this is what identifies a bearish divergence. Okay, very important. And this is what we're going to look for. When we see a divergence, this means that price is overvalued and there needs to be a correction, because the momentum waves are showing us the momentum of money that is coming into the asset. And just think about this. If money stops coming into an asset, yet the price continues to get higher, that means it's overbought. People are buying it at a price that's not too fair. It's too high than it should be, because that Bitcoin should be valued at a lower value, because there's not that much money coming into the asset to support such a high price. And this happens in markets. It's called being overbought. Too many people bought it. The price got pushed up too high. There needs to be a correction. This market cipher B is showing us that there does need to be a correction, okay? And so when we see this happen, this is what we want to look for when we are entering a short trade. And the opposite is true if we are looking to enter a long trade. Now, I'm going to just draw it out at first, and I'm going to show you some real examples, because I want to make sure people really understand this, because there's a lot of confusion out there about what a divergence is, what a divergence isn't, how do we know which one to look for, etc. So if we're in a downtrend and price is making lower lows and lower highs, right? We put in our high, we put in our low, that's lower than the low up here. We put in a lower high, that's lower than our previous high up here, lower low, okay? Then what we should be seeing on market cipher B is we should be seeing that we're printing a high wave that comes down, and then it crosses over, and it comes back to the upside, and then we print a higher wave that crosses over, and then we come down to the downside, and then we print another red dot up here, and then we print a green dot down here, okay? Now notice again what's happening. We're in a downtrend, and people are selling. Now a lot of people are selling because price is going down. I'm going to get into more of that later about how you should approach these markets, but if you see that price is coming down, okay, lower and lower, yet you see market cipher B, the waves on the bottom are printing a higher low, this means Bitcoin is now oversold. Too many people are selling it, and money is actually coming into the asset, as can be seen on our oscillator, yet the price continues to come down, showing that it's oversold and there needs to be a correction to the upside. And this right here, where price is coming down and momentum is coming up, is going to be a bullish divergence. This is going to be a buy signal. So a bullish divergence, we're looking at the bottoms, okay? A bearish divergence, we're looking at the top humps. A bearish divergence is the top, the bull is on the bottom. And so, bull div is bottoms, and we want to see price coming lower. Market cipher B coming higher. Okay, now I'm going to show you some real life examples of this and how you will actually enter the trades. I'm going to talk about what leverage you should be using for this strategy. Not very high leverage for this specific strategy. I only recommend using high leverage if you're a ninja trader, like the short that me and a bunch of people took this morning in my private Discord from up here. This was a ninja trade, right? So this one you can use high leverage because you're not going to get stopped out. But if you're using the strategy that I'm talking about in this video, it needs to be a little bit lower. We'll get into that later. So let's take a look at some bullish divergences and some bearish divergences and show you the trades that we could have taken in the past. So firstly, let's see if we can find a nice bullish divergence, okay? So we've got a bunch of them, guys. We've got a bunch. So right here we can see that, this whole way down, basically, price is coming lower and lower, okay? But we can also see that as price is coming lower and lower, momentum is getting higher and higher up until this point, right? Actually, we can connect it all the way down to here. And so basically what this means, guys, is every time you see price coming lower and momentum getting higher, you can look for a long trade. Now, this is something that's important, okay? This is actually very important. And the important thing is this. We are not going to wait for the dots to actually print, okay? We can't wait for the dots to print. If we wait for the dot to print, you'll notice, I'm going to draw a vertical line right here, a vertical line. You'll notice that we miss most of the move. In fact, if we wait for that dot to print, you'll see that we miss most of the move. We'll squeeze out 0.25% when really we could have had a lot more. we could have really had, you know, maybe a 1.4% move here. And of course, you know, that's not a bad move at all. This is not a bad trade at all. 1.4% is a lot, okay? So we need to get out of the mindset that we need to be making tens and hundreds of percent. Eventually, you'll get to that level, guys, as you get better. But if you're new, you know, just settle for winning trades in general, okay? So, actually, I'm sorry. I was looking at the wrong dot here. But even still, if we wait for the dot to finish printing, we don't get as much of a move. Right over here, if we wait for the dot to finish printing, yeah, we still do get a pretty big chunk of the move. But my point is, it's best to wait until just before that dot starts printing. So this actually would not be our entry, right? Because we're waiting for the price to come lower and the momentum to come higher. Now, this is right here a perfect example of a bullish divergence where we see the momentum waves are coming higher while the price is getting lower, okay? This is what we want to look for. Now, again, we're not going to wait for this green dot right here to print. You can wait for it to print, right? You can wait for the green dot to be confirmed, which would still allow you to get a nice 0.8% move. If we wait for this dot to be confirmed right here, we can also see that we will get a nice 3% move. Actually, yes. So for the sake, if you're totally new, forget that I said we're not going to wait for the dot to print. You can wait for the dot to print if you're new at this, because that is the easiest way to explain this strategy to a new trader. So scratch the whole not waiting for the dot to print, because that involves going to other time frames to catch a ninja entry. We are going to wait for the dot to confirm. So what we're going to do is, if we see a green dot printing on Market Cipher B, we're not going to long that initial green dot. Instead, what we're going to do is we're just going to wait. We're going to wait. And we're going to wait and see if a divergence actually starts to print. So from the time that we print this first green dot to the time that we print the second green dot, okay, you can see that price has come down and the momentum has come up. And so we would enter the trade right here at the top of this candle. We have the opportunity to make 0.92%. The second trade opportunity comes up where we can see right here from this green dot to this green dot, momentum comes up, and yet also from this green dot here to this green dot down here, the price comes down, okay? And so then what we can do is enter the trade on this candle. We would have been in drawdown actually for almost over 1% drawdown, but eventually we would have come up and had a 3% win, okay? And for that reason, I'm going to get into leverage and why it should be a little bit lower for this strategy. But I would say that 9 out of 10 times a bullish divergence on the 1 hour time frame will in fact result in a move to the upside. Okay, absolutely. So now check this one out, guys. Right here, we have a green dot printing here, and then we have a green dot printing right here. We can see that price has come down ever so slightly, yet the momentum has come up. And really what we want to do, guys, is, you know, we want to look at I would look at the close of the candles here. I would look at the close of the candles, and it's very, very slight here, but we can still see the price is coming down and the momentum is coming up. Even if it's very slight, that's okay. Okay? And this trade right here, you know, we would have entered on the candle. We would have had the opportunity to make, you know, a nice 1% move. If we had stayed in the trade, you know, we would have been in some drawdown. But really, that's the thing. You know, that's why I'm going to get into leverage and money flow in a second here. But really, we had the opportunity to make quite a nice move here, up to 5%. And so let's talk about the bearish divergences and what we're going to look for on the bearish divergences. And then I'm going to get into money flow, because as you can see right here, you might be asking yourself, well, you know, in hindsight, it's so easy to say, oh yeah, you should have stayed in that long, but you would have gotten scared and canceled the trade in the heat of the moment. Well, I'm going to get into it into a second, but here's the thing, guys. Money flow is very important. Okay, if you see money flow coming up, that will give you confirmation to stay in the trade, even if you're in some drawdown. But before we get into that, let's take a look at some bearish divergences. So right over here, we can see a really nice bearish divergence. Super, super nice, okay? Where we are we get the first red dot right up here. Price comes up, momentum comes down. We get the red dot right here. We enter on this candle. We could have made a really nice 1.8% move, okay? And then again, we get another one, and you can skip over waves too. That's something else I should mention. You can skip waves, right? So you could see that we had a bearish divergence right here, and then we printed a wave here that was higher than this wave, but because it's still coming down, right, because we still see that the price is getting higher as the momentum is getting lower, this is still considered a divergence, right? Look at what we're doing. We're connecting the candles on the red dot to the red dot, okay? Well, you know, it's hard to say for this one because the red dot didn't actually confirm until down here, which would not have been considered a divergence. But, you know, I would, you know, that this is where it gets a little complicated, guys, because sometimes you might have to front run it a little tiny bit and not necessarily wait for the dot. Personally, I like to enter when I see that the dot is clearly about to form, right? That's always going to give you the best entry when the dot is about to form. Okay, so let's say we're doing it by the utmost rules. If you're totally new and you're waiting for the dots, you actually would have missed this trade right here. You actually would have missed it, and you would have been sitting out of the market, really, for a while if you're only using this strategy until this long right here. So you would have gotten one short right here, which wasn't the best entry in the world just because of how volatile price was. And you came down and you would have closed, well, we'll talk about when to close the trades later, but that's almost a 2% move. Not bad. Not bad, especially if you're totally new to this. And then your next trade would have been right here as price is coming down. Price is coming down, momentum's coming up. This would have been a really nice long, actually. You had the potential to make 2.41%. And then let's see, our next trade would have been right here. Our next short would have been right up here where price is coming up and momentum is coming down. That would have been our next short right there. And I think, you know, those are all the trades that I can see in recent history. So we're talking like 4 or 5 trades since really August 24th. And today is September 6th. So what's that? 6 days. That's 12 days. So almost 2 weeks. We're talking like 5 or 6 trades. So you can see we're not taking a trade every day. We're taking maybe 3 to 4 trades a week, which, guys, especially if you're newer to this, you are going to want to wait for those perfect setups. You're not going to want to force the trades. You need to get out of the mindset that you need to be in a trade every day. The more you expose yourself to risk in a market, especially if you're new, okay, somebody who's more experienced like myself, where I'm scalping, and even when I'm scalping, I might not even take a scalp every day. You have to wait for the good setups. So if you want to actually start doing this and doing it full time, this is a great strategy to start out with. It's also very important just to remember that, you know, although you are, yes, you're starting out, if you do have the hopes of doing this full time, you need to grow into this. You need to gain experience. And speaking of that, if you do want a comprehensive course, check out jasoncaspertrading.com, because this course will give you the knowledge and the skills you need to become a confident, more profitable trader, where I walk you through step-by-step everything I wish I had known before I started trading. So you can check out the success stories here. This is literally changing the way thousands of people approach the markets. And assuming you've never even looked at a chart before, we go over all the technical analysis you need to know. We go over Market Cipher in extreme detail, 10 sessions on Market Cipher, my favorite Market Cipher strategies, the ones I use to get those ninja entries where I long the bottom and short the top. You know, not even joking. And then obviously I don't do that all the time, guys, but there are times when I do. I'm going to show you how I do that. We're going to go over how you can create and test your own trading strategy. I give you trading strategies that I myself use that are very successful. We're going to go over mindset. We're going to go over risk management, very important, so that even if you're not the best trader in the world, you can still be profitable over time simply by managing your money correctly. There's currently a 30% discount in the description of this video. Make sure to check it out if you're interested. So we went over divergences and how we're going to use divergences to enter a trade. Now let's talk about using money flow, because the money flow is even more powerful. So what the money flow shows us is literally money coming in and out of a market, okay? So this is kind of going to help if you're wondering, should I enter on this dot or should I front run the dot a little bit? Because remember, I was going back and forth saying, yeah, wait for the dot, don't wait for the dot. Here's what we need to do, okay? And this is what I recommend if you are using this strategy. There's 3 ways to do it, okay? You can either front run the dot and enter on this candle right here. Let me zoom in and show you guys the 3 options. This is going to be up to you and your experience level. But either you can front run the dot, where when you see this wave is getting pointy and ready to cross over, you can actually enter the short right here on this candle, because you see the fact that the momentum wave is coming down and the price is coming up, okay? That's option number 1. Now, that might be a little bit risky for people, so some people like to wait until the dot is printing. Now, when we say the dot is printing, what that means is this. This red dot is not permanently in history until this 1-hour candle closes, okay? And in the meantime, let's say that this candle starts out, it opens up right here, and it starts to come down. That red dot will start to print on the chart, but if something happens and price gets another pump, this red dot will disappear and the wave won't cross over. In fact, the wave will just continue upwards. So people get confused. They're like, do I wait for the dot? Do I don't wait for the dot? If I wait for the dot, I won't get as good of a move. If I don't wait for the dot, I might get stopped out and lose money. Here is the perfect solution, guys. We are going to be looking at the money flow. Okay, looks like Ethereum just printed a 1-hour green dot. But anyway, okay, so we're going to be looking at the money flow. Notice something here, guys. Notice something very important. Okay? If we take a trend line and connect the top of the money flow wave to where the money flow is currently at when the wave starts printing, if we can clearly see a downward trend like we see right here, we see a downward trend, that means that money is leaving the asset and you can have more confidence in entering the trade before that red dot prints, because money flow is coming out, and money coming out of the asset means the price is going to come down, right? That's just the way it is. Look at what happens as the money flow comes down, right? Look at what happens as the money flow comes down. Money flow continues to come down, right? In fact, the money flow continues to come down until right about here, right? Until literally right here, and then it starts to come up again. And so what we can do is we can look at the direction of the money flow, and wow, Bitcoin just printed another red dot right next to that green dot. And so this is what I mean when I say a red dot is printing, guys. When I say a red dot is printing, it means this red dot could go away because the 1-hour candle will not confirm for another 49 minutes and 44 seconds. If we get another pump, whoop, that red dot will go away. Okay. I'm currently short, like I said, from up here. It's a juicy short, guys. Super, super juicy. Caught the wick, in massive profits. Well, I shouldn't say massive. They're not massive. It's good profit, guys. It's good profit. I'm obviously, when we're taking smaller moves like this, my swing longs are in massive profit. My scalp shorts are a decent profit, right? Okay, so the money flow is going to be like the main thing that we should look at if we are thinking of entering a trade or uncertain about whether to enter a trade. Look at the money flow, okay? And this money flow can also tell us how long to stay in the trade. Now, here's what I mean by that. If you see that you're getting the divergence right here, okay, and the dot hasn't printed yet, and you see the money flow coming down, right, you could get a really nice entry right about here, okay? So you're going to enter the trade right here at about 49416. And if we do enter a short position right there, okay, and let's say we're using good risk management, and we're going to get into that more later, But let's say you put the stop loss above the last swing high, which is what I recommend, above the last swing high. The reason for that is because we're assuming, based on our analysis, that we're going to enter now into a local downtrend, and that the price is going to stop making higher highs and higher lows, and it's going to start making lower lows and lower highs. And the reason we're assuming that is based on our confirmations. So the invalidation point of this trade would be if we actually do put in a higher high. If we put in a higher high, we need to get the heck out of the short because we're still in an uptrend. There's no reason to short the uptrend. But if we are indeed having a divergence and we're going to have a correction, that means this is the invalidation point. If price, as long as price doesn't come above here, our trade is still valid, right? So then we can short this thing all the way down, and look at how far down we could take it. We stay in the trade until we see the money flow starting to curve back up. So, you might say to yourself, yeah, I'm going to get out right here at this bottom, which would have been a valid place to get out, because we can see that is actually the point where, yes, the money flow is starting to come up, right? We see it coming down from the time we entered the trade. The money flow is coming down, 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 and then it starts to curve back up. So you might say to yourself, well, this is the time to get out of the trade, in which case you would have been right. Okay, so you could have gotten out of the trade right here when you see that money flow starting to curve up. Also, we had a bullish divergence here as well. So if you see a bullish divergence, that's a sign also to get the heck out of your short, right? A bullish divergence is a sign to get the heck out of your short, as well as money flow coming back up. So really, we're using money flow to enter, we're using money flow to exit. Okay, we're using money flow to enter, we're using money flow to exit the trade. And the same is true now with this bullish divergence that we got here. So we exited our short, and we come right into a bullish divergence right here. And again, we can front run this a little bit simply because we see that the money flow is starting to curve up. Look at how we connect the money flow together from this purple wave right here to this purple wave right here. We see it coming up. So before that dot even prints, we might be able to enter a trade literally right on this candle. And then we enter our long position right down here. We put our stop loss below that last swing low, which is a very tight stop loss actually. That's one of the reasons why this is such a good strategy, because you can use a tight stop, and we would have been able to take quite a bit of profit out of here. So really, once we see that the money flow is starting to come back down is when we exit the trade. And what do you know? The money flow, literally, we can see it come back down right about here, right about this top of the wave. We see it was blue, and then it starts to come back down below the zero line. So that's where I would look to exit the trade based on the money flow. Based on the money flow. Okay, and then we would have taken that long, and then we would have gotten out of that long. Our next short would have been, this one up here. And so let's see how this one would have worked. We got our bearish divergence coming in. Now, look at what happens here, guys. This one is a little bit different because the money flow is actually getting thicker. Okay, so this one we have less confirmation. And so for this one, I would wait for that dot to confirm. I would wait for that dot to confirm. And when we have the bearish divergence, we're kind of expecting that the money flow is going to come down. The divergence is the precursor to the money flow coming down. It's more powerful when they happen together. But if the money flow continues to come up and you still see a divergence, you can enter. But in this case, I would wait at least for that dot to start printing. And that's when you would enter the trade. So in this case, we would enter the short right here. Let's say we just waited for the dot to confirm, and we're going to short this thing down. In this case, we have to use a looser stop loss, a 1.3% stop loss, because that's the last swing high. You could use a tighter stop if you want, but you have to understand that you could get stopped out, and then the price could still come back down, like what happened, right here, right? Price wicked back up and then continued down, because the downtrend is valid until we come up above this high. So you could use a looser stop here, which means you probably put fewer contracts on the trade. And we're just going to short this down until we see the money flow starting to curve back up, which happens right around here. Okay, right around here, I'm going to put a horizontal line right where it happens, and a vertical line right where we first see the money flow starting to come up happens right here. So we would have been in this short, and we would have made about, hang on, would have made about 1.4%. Okay, that's really not bad. That's not a bad trade at all. And that would have been the last short that we took. And then, let's see, do we get a long in here? We do absolutely get a long because of the bullish divergence on the 1 hour. We can see this green dot right here. This candle is right here. And then this bottom right here, you know, even before that dot prints, guys, you know, obviously we could wait for the dot to start printing, but we have more than just the dots. Look at the money flow again. We see the money flow from that first green dot down here to the second one. Money flow's coming up. And so we could front run this a little bit. And this would have been actually a really nice trade to take. Let's say that we entered on the close of this candle. You know, you could still be in this long right now, right? You could still be in this long right now. Oh, sorry, that's a short. You could still be in this long right now. You know, say you set your take profits higher. You know, I wouldn't start to get out of this trade until the money flow is starting to come down. And now the money flow is starting to come down. However, you know, you might say, well, we just printed a green dot. We could come up more. That's true. So here comes a part of risk management, which is this. If you don't want to close your whole trade and you want to keep some of it open in hopes that we come up higher, right? What you can do is you can take partial profits out here. You can take 50% of your profit out right here, which is the way I usually do it. And then you can move your stop loss maybe up to here. So worst case scenario, it's a winning trade for you, right? You might say this is a bull flag and we're going to come up higher. Okay, great. Well, ensure that you're locking in profits right here. Take out 50%, sell half of the contracts from the long, move your stop loss up to profit so that worst case scenario, you get stopped out in profit. Best case scenario, the trade keeps going, and as the trade keeps going, you can take out more profit. Take out 10%. You know, let's say, you know, on Femex and on Bybit, you can take out whatever percent you want. So price comes up here, take out another 10%. Get a little retracement, comes up even higher, take out another 10%. And then you could just hold this thing as a swing trade, right? But what's important is that you're looking at money flow and at least taking out a decent portion of the trade to ensure that it's not going to be a losing trade. So now let's touch on risk management a little bit because this is very important. Good risk management means you're not risking more than 1% of your total trading capital. Now there's different ways to do this. If you have $1,000 of trading capital, right, that means you could put $10 on the trade, which is 1%, at 1x leverage, right? And you know, you're probably not going to make that much money trading that way. The second option is using some leverage. Okay, using some leverage. So if you have $1,000 in your account, right, 1% equals $10, right? So if you're making a trade with $10 and you make a 1% move, well, guess what? It's not very much money, is it? Okay, this is with 1x leverage. Okay, 1x leverage. Now what we can do is we can up our leverage. And what leverage does, and I made a video on this, I recommend you check it out, especially if you're newer to trading. Go to my channel, Jason Casperoni. Go to videos and go to, yes, leverage traders. How to use leverage to lower your risk and make more money. Please watch this video, please. This will show you how to use leverage. This will show you how I use very high leverage and risk a very small amount of money, okay? But what we can do is we can up our leverage to maybe 10x, which will allow us to still put only $10 of our capital on the trade, but actually put $1,000 on the trade because we're 10xing $100 on the trade. We're 10xing our margin. So I can still only put that $10 on the trade. 10x leverage means I can risk that $10, that same 1% of my $1,000 account, yet I can place $100 on the trade, okay? And you could up this too, right? Let's say you're using 20x leverage. Well, now you're only risking your $10, but you can put $200 on the trade. Okay? So basically you have to do the math. If you have $1,000 in your account, you're using 20x leverage. Okay, that means you can put 200 contracts on the trade, but you're only putting up $10 as collateral. Now, we know that the higher leverage you use, the easier it is to get stopped out, because the exchange will liquidate you when price has gone up enough or down enough to basically the exchange is not going to lose money. So if this $10 collateral is going to be in the negative, the exchange will liquidate you before the exchange is in the negative, because you're technically taking a loan from the exchange. Okay, if this doesn't make sense, check out this video, it will make sense. But what we need to do now is we need to find a happy medium of leverage that we can use that will allow us to actually start to make some decent money, but won't put us at the risk of being wicked out. Okay, so what that means is we're really going to have to look for those good setups. The best possible setups are going to be the ones where the money flow and the momentum waves are both diverging. If you only wait for those setups, I would say that you could use 20x leverage. Not financial advice, guys. Not financial advice. But for me, I use 25x, 30x leverage because my entries are really good. The better you can get your entry, the higher the leverage you can use, because you know that if there's a divergence of both momentum waves and money flow, the probability that price is just going to tank from there is very high. Okay, I recommend everybody starting out with very low leverage just to get the feel of the markets, because, you know, if let's say you entered a short right here, which still is not a bad short, right? Let's say you waited for this dot to confirm, and so you enter your short right here. If you're using high leverage, you will get liquidated if price comes back up to here. But if you're using low leverage, you're just in drawdown and you're looking at the money flow saying, okay, money flow is coming down. I think we're still going to come down. I can stay in the short. But if you're using 1x leverage, there's no way you're going to get liquidated, especially if you're only risking 1% of your account. Why 1%, guys? 1%, this is very important. I know people hate risk management, but the truth is, if you only lose 1% of your account per loss, it's very easy to make it back in one trade. If you are 10x leveraging, 20x leveraging 100% of your capital, you could lose 25% of your whole trading account in one trade. And if you lose 25% in one trade, in order to break even, you have to make 50% on your next trade, right? The reason for that is this: if you have $1,000 and let's say you lose 25%, right? Or let's say you lose half your account, right? You lose 50%. Well, now you only have $500, okay? So what happens if you make now 50%? Now you only have $750. So you lost a trade and won a trade the same percent, but you're still negative $250. You would have to do 100% to get back to your $1,000. So if you're only risking 1%, right, and let's say you lose 5 trades in a row, okay, so now you have $950 instead of $1,000, okay, you're always only risking 1%. But then you have a really good trade, like the trade that I actually did take this long from right here. Let's say that well, this is not a long that you could have taken with this strategy, but let's say you did take a long from right here, okay. Now all of a sudden you're making 5.5%. So you lost 3%, and you lost 5 trades, right? Which is $50, and now you have that $950, and you're gonna win one trade, and so you just made back 50. So now you lost 5 trades, you won one trade, and you're $2 in profit, right? Because we made $52.25. So we lost 5 trades, right? We had 1,000, lost 5 trades, about $950, okay? Win one trade at 5%, and now we have $1,002.25. So you see that you lost 5 trades and won a single trade, and you're still in the green. This is why risk management is so important, and this is why it's very important you only risk 1% at a time. And in order to do this and make significant money, we're going to utilize leverage in a smart way where we're taking that $10 and leveraging only that $10 to make it worth more. Okay, so 10x, start with maybe 3x, then 5x, 10x, 20x. Again, because it's only 1% of our account, we can take a loss or 2 or 3 and still be profitable over time. What you don't want to do is put 100% of your account onto a trade and leverage that. That's one way ticket to Wreck City. If we're utilizing good risk management of only risking 1%, then things are going to be pretty well. So guys, that's the video. I really hope you got value out of it, especially if you're a new trader. Honestly, this is something that a lot of people would charge for this kind of information. I'm not saying that to be braggadocious. I'm just saying if you take this information and you digest it and you stick to it, and you're a new trader and you're somebody who has a lot of ambition, a lot of passion, a lot of drive to make this happen, I think this is a great starting point for you. And as you trade this way, again, taking maybe 2-3 trades a week, nothing too crazy, you should be learning technical analysis. If you want to, check out jasoncaspertrading.com. 30% discount in the description. Also, guys, if you do want to join the private Discord where I post my daily technical analysis updates in here, I post daily technical analysis updates in extreme detail, all the levels I'm looking to trade. I post potential trade setups in here. Like, for example, just the most recent one, this short that we took from about 51K. This was a trade that I had given, the setup in advance. It actually did play out. A whole bunch of stuff in here. You can do that by going to patreon.com/JasonCasper. Of course, none of this is financial advice. I'm just giving you my analysis, showing you what I'm doing in here. We also have a great community of traders in here that post technical analysis and potential trade setups in here as well. And it's a really great community. When we get the 16-hour blood diamond and people start hyperventilating, we're there. We're there for each other. All right, y'all. Make sure to like the video, subscribe to the channel, and I will see y'all in the next video. Peace!